foremost. I think for the companies that we invest in, we like to have founders that have, a vision of where the world is going. And that might not be the product that they're developing today, but it is directionally where they think, things are going to land. And so they're building in that space. And so there are certain areas that we're, very excited about, whether it's, healthcare or future of work, where, a founder may have an idea, they may build something out, they may have gone to market and have some early indication. But like our experience, 10 years, running companies and investing in them, like we've just seen how much they pivot. So again, like we're looking for directionally, where do you think the world is changing that you want to be? Maybe not today, but in 5 to 10 years.
At Context Ventures, our podcast, Advancing VC, covers all things startup and venture capital, primarily how startups and venture capital are changing from the emerging manager perspective. We've talked with venture capitalists, limited partners, and founders who are actively working at the frontiers of our industry and are advancing venture capital. Today, our guest is Jenny Fielding, a partner at Everywhere Ventures. Jenny has recently published a book called Venture Everywhere, and I've known Jenny about a year, if not 2 years now, and she is definitely at the forefront of advancing venture capital with her partner, Scott. I'm so delighted to be interviewing you today, Jenny. Thanks for joining us. I want to jump right into a question I have, and that is, as a graduate of law school who worked in finance, how did you find yourself falling in love with tech, and what gave you the confidence to start your first mobile software company?
Well, first of all, thanks for having me. Big fan of yours, Tim, and of the podcast, so great to be here. I think like many founders, we don't go out to, start companies, we go out to solve problems. So I had a very traditional early part of my career, born and raised in New York City, actually live on the same block I grew up on, which is fun. Wasn't a time where there was a lot of startup activity in New York. And so I kind of got channeled into other areas, which in my case was law and finance, was really what, my peers at Columbia were doing, my peer set in general, and didn't really take a lot of agency, if I could be honest. I actually loved those jobs. I had great experiences, but I felt like I was on someone else's path, maybe not my path. And then in 2007, I actually had a personal problem that I wanted to solve, and I didn't think of it as a startup. I thought of it as a pain point in the world that other people were suffering from. And as I kind of looked into it more, I thought, wow, this could actually be a company. And so again, I call that, the empath founder, solving a problem for yourself. Again, 2007, there weren't really many startups in New York. People weren't really talking about that. But when I kind of proposed that I wanted to start this company, everyone said, well, you got to move out to the West Coast. I looked around and I said, like, oh, that's interesting. Why would I have to do that? And they named all these reasons. And I kind of thought, well, I mean, New York has a lot of these things in different forms, right? We've got like incredible universities with amazing talent coming out of it. We've got every multinational based here. And we've got a lot of capital. We may just not have venture capital, right? We have rich people on Wall Street, in finance and real estate. So I kind of dug my heels in and said, I think this is actually a good place to build a startup, even though there's not much of an ecosystem. So that was really my journey, very organic. The thing I like to bring up, because I think it kind of comes up in my story a few times, and I think it's something that doesn't get talked about as much, I really bootstrapped this business. So I was working full time at JP Morgan while I started this company nights and weekends in my living room. And that's been kind of a pattern of mine, same with Everywhere Ventures. I was working full time at another fund while I, incubated the first iterations with Scott of Everywhere Ventures. And so maybe that's been kind of my pattern of, testing the waters, iterating, see what sticks before diving in.
Perfect segue into Everywhere Ventures. What inspired Scott and you to start Everywhere Ventures, and how does your model differ from traditional venture firms?
Yeah, so I'd had, incredible experiences as a founder. I started 2 companies. I made a lot of mistakes. And then I spent about 7.5 years running Techstars in New York. And through that experience, I was able to invest in some, founders that turned out to be, incredible entrepreneurs. but also just the kind of the pattern recognition of thousands of applications, hundreds of interviews every year. And so when Scott and I got together, we kind of took a step back from our experiences. Scott had come from a big firm on Sand Hill Road and was more of the operator working at Google and Facebook. And we said, what if we could create this Frankenstein of a fund that took a little bit of this and a little bit of that? And really kind of create something that felt a little bit different. So, what were the good attributes of having a fund? Well, there's governance, there's, quick decision making, there's structure. What's nice about an angel group? Well, there's community, there's crowdsourced deals. So we kind of looked around at all the models that we'd been exposed to and said, maybe we can create something different. And that led us to the thesis of Everywhere Ventures, which is really about believing innovation is everywhere and wanting to be where the best founders are wherever they are, which is quite different than the, I want to invest in the 25, mile radius, which was kind of the traditional venture model. And then could our LPs be actually the source of our deal flow? So over the last 7 years, we've rounded up an incredible group of LPs, the people that give us money, who are all founders and operators. So they've been in our shoes, or they are in our shoes, and they're on the ground seeing interesting founders, seeing interesting concepts. And so, really having a front row seat to innovation, and that's kind of the pipeline for our deal flow. So I think those are some of the nuances of Everywhere.
And then I'm going to now put myself in the shoes of a founder. What stage do you all invest in, and what do you all typically look for in your investments, and how do you work with founders?
Yeah, so I think one of the things that we thought was, broken or tough about venture was this idea of a one-to-one model. So I'm a general partner at a firm, I invest in a company, I take a board seat, or I have a call with the founder every week, and that's a great model. It's just you can't scale that model, and that's okay. So what we tried to create was what we call a one-to-many model, where you've got just 2 GPs, but you've got 300 portfolio companies and this community now that we've built of 500 founder and operator LPs, and then another 300 founders who are in our community. And so how could we kind of leverage that institutional knowledge that all those folks have to support the portfolio? And so the way that we do that is we've built a suite of collaborative tools that support our founders. So whether it's, our Airtable, our Slack channel, all these things that we try to build kind of community and resources and content and all of this, we do it from the perspective of how does this scale? Now, we're not trying to become, this mega fund and have thousands and thousands of portfolio companies. That is true. But at the pre-seed, which is where we invest, so we write small collaborative checks, usually up to $250K with other, great investors. We need to have a lot of shots on goal, right? That's how the venture model works, because we're going in so early at the formative stage. And so to do that, we naturally have a large portfolio, and the pushback that we get from everyone is like, how do you support this portfolio? So we've been very planful, we've thought about it, and it's taken us, 7 years, in a sense, to kind of execute to get where we are, building the building blocks one step at a time to build out this community.
As a co-investor in a company, I can attest to what you've said in terms of community resources, leveraging your entire community, your LP base, your founders that you've backed. And it's been really impressive to see that. Also, as someone who consumes a fair bit of content on LinkedIn, I've seen a lot of praise for you all. Praise for you all investing when not other investors are investing in the pre-seed. And how approachable you are. And I think just like in the past week, I saw a list of if I was a pre-seed founder, who I would talk to, and you were one of them. How do you engage with founders that prompt that type of reaction?
Someone who actually really respect an investor, I saw on LinkedIn, he wrote something about how, this job is really about selling. And I have a slightly different perspective, which is this job is about, bringing your authentic self. I'm an intense person in some ways, but I am, very authentic. So I tell it like it is, which I find many investors actually don't. I'm really straightforward, and at the end of the day, like, because I'm so early on the cap table, I can really be aligned with my founders. I don't have to worry about, up rounds and all these things because like I'm kind of that foundational partner. And so as the companies get further along and boards are formed and all of that, like other people can worry about governance, other people can worry about that, and I can really just focus on what I love to do, which is surrounding founders with resources. So listen, I mean, I definitely don't always get it right, but I think people appreciate just the authenticity that I bring to everything that I do.
Let's talk about the pre-seed stage just for a bit. And our take at Context is pre-seed is what Series A was maybe 10 years ago, or what seed was a few years ago. And A4 has mentioned this too, because they talk a lot about the state of pre-seed. Do you think there's going to be a pre-seed, just given this kind of creep of like how early we get? That's my first question on pre-seed.
Well, it's funny that you mention A4 because they just did an investment into a company that we preceded. So even though they're a great pre-seed fund, they're writing actually bigger checks, like over $1 million, it seems. And we were actually before, but we weren't really an angel round. I mean, it was like kind of a proper $1 million round. So I think, all of the names are just becoming unclear, and maybe that is part of venture capital that needs to be, rethought, is like, what are these kind of tranches and stages? So yes, so I agree, things have really changed. I think where we invest, whether you want to call it, pre-seed, first check, whatever, there's probably a few things that are in place. There's a really good founding team, because that's mostly what we need to base ourselves off. And you and I have had discussions about this, about founding teams and who they are and how we put them together. So I think that's like first and foremost. I think for the companies that we invest in, we like to have founders that have, a vision of where the world is going. And that might not be the product that they're developing today, but it is directionally where they think, things are going to land. And so they're building in that space. And so there are certain areas that we're, very excited about, whether it's, healthcare or future of work, where, a founder may have an idea, they may build something out, they may have gone to market and have some early indication. But like our experience, 10 years, running companies and investing in them, like we've just seen how much they pivot. So again, like we're looking for directionally, where do you think the world is changing that you want to be? Maybe not today, but in 5 to 10 years. So I guess that's how we define the pre-seed. So for us, it's, we also have kind of like a formula, right? Like we're investing about $250K in rounds that are, anywhere from, call it $500K to $2 million. And that valuations really line up with that. So I know on the West Coast, you can have $8 million pre-seeds at $50 million. I think that those maybe are edge cases, or maybe that's just a different definition, but where we invest is slightly different.
And then I believe Everywhere Ventures has not just a national view on venture, but a global view on venture, just because you all invest globally. Can you talk about your global play?
Yeah, so while I was at Techstars, something started to happen. So I spent almost 8 years as managing director at Techstars, which is an accelerator. And something really started happening in the accelerator world, which was there was so much money kind of rushing in 2018, 19, 20, that it really actually became somewhat obsolete to be like running a program in New York, because a lot of founders could just like go out and raise money, and sure, they liked the idea of being supported with resources and whatnot, but it was tough. So I'd spent a lot of time traveling around the world over the last 15 to 20 years, and I thought, you know what, there's tons of founders around the world that could really benefit from my program, my network, and the connectivity to everything that was happening in the US. So I just got on a plane, and I would just go to places that most of my peer set weren't going to. And so I would be in Africa, and I would be in LATAM, and I'd be meeting entrepreneurs, and the common thread was like, hey, we could really benefit from your network and, again, the connectivity. So that was where actually it started for me. And Scott actually has kind of a similar story of working at a big firm and, seeing some incredible companies around the world, but the firm saying like, no, we just want to invest in our backyard. So I think when we came together when we decided to start the, Everywhere Ventures, I had already traveled to 100 countries. I had already invested, globally. And I thought, wow, like there's something really interesting that we could do here that other folks aren't doing. And then I think, pandemic happens, people kind of scatter, and this idea of geography like just gets totally upended. I mean, oftentimes we'll have one founder in Austin, one in London, and one in Singapore. Well, where's that company based? I mean, they might be, or, typically they are a Delaware entity, but I mean, where are they building? So I think that, coupled with the fact that now, maybe with AI and some of the categories, like people really want to build global solutions. And I think with the technology, everyone has a supercomputer in their pocket. Like you can access technology from anywhere, right? And so I think that confluence of things have made us feel, really excited about global opportunities.
So your book, Venture Everywhere, what I find fascinating is you've broken your chapters by geographic regions. From Mexico, chapter 5, Spain, chapter 10, Brazil, chapter 13, immigrant founders in the US. Can you talk about why you structured the book that way? Obviously, there's a global theme to it.
Well, I wanted the book to be kind of like vignettes where you could pick it up at any place and travel, with me to those places. So every chapter is composed of two components. It's me in those locations, in the ecosystem, experiencing what it was like, coupled with an interview I do with a founder who's built a company, in that region. So you can really get an inside look of what it's like to build a company in Egypt, or what it's like to build a company in Brazil, and then what's an outsider's view and how have I interacted with that. So yeah, 12 chapters, 12 countries, 12, fun Jenny adventures paired with some principles that I drew out from not just these founders, but meeting hundreds and thousands of founders, around the world. What were some of the common characteristics, which I, frame into this thing called the everywhere mindset that I saw threaded, across these stories. And, many of these stories are very different than the one that I described for myself, like growing up in New York City, living in the same block I grew up on, going to Columbia University. Some of the most successful founders in the book that I interview grew up in small rural towns in war-torn countries, right? Where they had to kind of figure out what life was going to look like, very different than my experience, right? And so telling those stories was really important to me because I do feel we hear a lot about kind of the same characters. We know a lot about Mark Zuckerberg. We know a lot about Bill Gates. Well, what about the people that have just built, game-changing companies or in the process of building them? Because I do interview many founders that are, building unicorns where they live. What about their stories? What can we learn from them? And so that was really important for me to kind of get out of the US perspective and say, let's look around at what these incredible entrepreneurs are doing and what can we learn from them. And
it's more than just a startup and venture capital book. It's you talk about the everywhere mindset. Do you want to double click on that a bit more?
Yeah, so I mean, again, like pulled out some themes and archetypes that some are, maybe more obvious, like having conviction, and some are a little unexpected, like how we need to celebrate moxie and that idea of having a chip on your shoulder. And I think sometimes in the US that's really looked, badly upon, right? I mean, you're not collaborative or you're not easy to deal with or you're a little salty. But honestly, that kind of characteristic often is what fuels an entrepreneur that really needs resilience, that needs to go the long distance, and that needs to have that really internal fire. So yeah, the everywhere mindset, I think, is something we can all adapt. And it's not about being prescriptive. You need to have these 5 things. It's like, hey, these are some things I noticed in some of the most successful entrepreneurs. And these are some things I noticed within myself.
Awesome. Heavily recommend the book. Folks, please check it out. Venture Everywhere, Travel, Entrepreneurship, and a Roadmap for Life. What I find fascinating about Everywhere Ventures is in episode 2, we interviewed Hans Tung. and Hans was at GGV, and then they became Notable Capital, and they divested from what they were doing in China. You all are obviously not just focused on China, you're focused globally, but it's fascinating to see just venture is obviously not a monolith. And so can you talk about, especially right now where there's we're going to do tariffs in the United States. We're not getting along with Europe so well. How do you navigate your global presence?
Well, it is interesting. So many people have said, wow, this book is coming out at a very funny time because you're talking about how we all need to become global citizens, and kind of the mantra we're hearing from the current administration is really about looking more inwards, focusing on America, and maybe potentially alienating some of these partners. And I think, it's even more important for us to kind of reach out and, be out there. Maybe 20 years ago, you didn't need this, but now I challenge you to go work at a company and not have a colleague who's working in another country, not have a customer who's working in another country. And so if we don't learn how to have empathy and how to interact and respect and understand other people's cultures, we're just not going to progress. So it is definitely coming in the face of what we're hearing, but I'm seeing it, differently. And I think that these are principles that we can all, benefit from. It is interesting, obviously, investing globally and thinking about, just some of the practical things with our founders, like, will they be able to get visas to come visit us or come meet founders, where you are in Silicon Valley? So these are all concerns, but things that, we can help them navigate. And I think what's, powerful about the Everywhere community is that everyone's kind of going through it at the same time. And so, little founder clusters are popping up within our group of, how people are navigating some of these challenges.
In the Bay Area where I'm at, I'm frequently, how should I say, I frequently see the importance of an everywhere mindset. In downtown San Francisco by City Hall, there's the United Nations corridor. It's actually where the United Nations got stood up after World War II. And even when I go to Muir Woods, there's a monument of this is where the first United Nations delegates came after World War II. All of them were like, hey, we had this crazy war. Everyone's connected. We need to figure out how to rebuild together. So I definitely, your vision of the world is one that definitely resonates with what I feel and what I see in San Francisco around just the aftermath of World War II. Getting back to startups, in a recent LinkedIn post, you mentioned that you were shocked to learn how funds are holding more dry powder than at any point since the 2008 financial crisis because you thought that reserves from the post-tech bubble of 2020, 2021 would be depleted by now. Given the current fundraising climate, what advice would you give to founders raising capital now?
Yeah, so for a little bit of context, right, in 2020, 2021, funds just hoovered up so much money, and even beyond that. And so now there's $677 billion on the sideline waiting to be deployed. So you think great times for founders, but if you talk to founders, they would say, it's a slog out there. So what's happening? And I think a few things. One is that these larger funds have raised most of the money. So you and I with our micro funds are not sitting on billions, unfortunately, but they've raised a lot of money, and the game has kind of changed where they needed to underwrite for whatever outcome. Now maybe the market's a little more realistic. We're not sure what outcomes for M&A and IPOs are going to be. And so for them to deploy in a way that doesn't match their model could be really problematic. So what that means is they're being a lot more careful and judicious about how they spend their cash, sitting on lots of money. Now, another, issue is how the LPs are thinking about that, paying management fees on cash that's sitting there, but I guess that's for another day. But your question is really around, how do you navigate that? And I think that's the question. While, during 2021, it might have taken you as a founder 30 meetings to get to a term sheet for a seed, I would say you've got to double or triple that. So we're advising founders for that seed. You're going to have to talk to over 100 investors. And that can come as a big shock, right? Like 100 investors, I'm running my business and I've already warmed up people and I have insiders ready. Like, I really need to talk to 100. And I'm like, I would do the work for it. So what we suggest is that, you run a proper process, meaning, think of it as a sales process. You're going to be very organized, process-oriented, metrics-driven. You're going to fill that top of the funnel, right? So make sure that you've got literally 100 well-vetted funds in your pipeline. And then you're going to figure out, who in your community, your network, are the best people to, help you connect into that capital. So I think what it means is just taking a few extra months, like doing that research, creating, an investor pipeline doc, getting all of your stakeholders, your mentors, your investors, ready to support you actually just doesn't happen overnight. So I think that you've got to, give yourself a couple of months to do that. And make sure that your network is kind of primed to help you, because fundraising is not a single player game. Like, you really need to tap into your community. So I think those are some of the piece of advice that I would give to founders that are raising right now.
And for founders that are raising, they also need to be cognizant of what's happening in venture. And within venture, over the past few years, there's been a lot of shifts that you and I have both seen. Solo GPs, rolling funds, platforms trying to go earlier, platforms trying to do everything. Where do you see venture changing in the next few years? What do you think is going to happen more or less?
Yeah, there's definitely a lot of people talking. I don't know. I don't have a crystal ball, but there's a lot of people talking about, the consolidation, I guess, of emerging managers as capital becomes harder to source from the limited partners, the folks that give us money. I think at the crux of the problem across venture, it's really around liquidity. There just isn't a lot of liquidity in the system, right? So we haven't seen like a super robust M&A environment, although actually last year was not terrible, but we haven't seen some of the big ones. We saw Figma get blocked and some of the others. And obviously IPO market, nothing really happening there the last couple of years. And I think everyone's waiting for some big ones this year, right? For Stripe and some big names to like add liquidity in the system, because, that really trickles down. I raise most of my money from founders and operators, and if they're not getting money back, if that isn't being recycled in the system, that's really tough. And if you raise from institutions, it's kind of the same, right? They need to get their returns before they can deploy. So that coupled with, the higher interest rate environment where people can keep their cash safely in T-bills for 4.5%, when the average firm isn't, producing that after 10 years, it's pretty hard to make the argument that venture is a good place to be, unless, you're like us crazy people who not only have a model that potentially works, but that, we see a future that's much bigger. We see technology as being transformational to our lives and to the world, and that's where we want to, spend our time. So, I think we've seen just a retreat to traditional asset classes, private credit, all these things, and that's taken money out of the system. Who does that impact? Well, not really Andreessen Horowitz, because they can go raise their billions from sovereigns and other places. It impacts, people that have, smaller funds, maybe like sub 200 million. If the money's not there, it's hard for them to raise their funds. So that's like, I guess, a little bit of a synopsis of where I think things are. I, though, unlike most people, am very optimistic about venture, and I'll tell you why. I'm old and I've lived through many cycles. And I remember when everyone said venture was dead, many times before. I remember when people said crypto was dead and everyone was like, I'm not investing in crypto. I've lived through a few of these cycles now. And quite frankly, I think as soon as interest rates come down a little bit and we have a few IPOs, people will be rushing back into venture. One, because I think there is a lot of upside, and two, because I think there are a lot of people that believe, like you and I, that technology is the future and they want to be part of incredible founders' journeys. So I'm optimistic. I don't have the crystal ball of whether that happens in 6 months, in 12 months, in 18 months, but I do feel like it will come.
I think that mindset might be also just associated with the stage that we invest in. At the pre-seed stage, we have to be buying and holding for years, if not a decade. And so we're thinking very long term. And I think that long term thinking tends to oftentimes lead to cautious, thoughtful optimism.
Yeah, and that's a great point. I mean, when investors or LPs, ask me about the market today, I'm like, well, that's irrelevant. Like my exits are coming into at least 10 years. So ask me where I think we'll be, in 2035. That's kind of a scary to even say that number, but that really is the truth. And that's played out in my portfolio as well. I started investing really in 2013 and 14, and I didn't see like meaningful exits, and some real upside in my portfolio for like 8 to 10 years. So
a lot of podcasts talk about challenges that founders face. On this podcast, we oftentimes talk about challenges that emerging managers face. What are some, when we talked about it's hard to raise capital, there's mega funds, but what are some hurdles that emerging managers face, and how can they best walk around them or jump over them?
Yeah, so we talked about, accessing capital for our funds, and that I think will always be a pain point for an emerging manager. You're less proven, I guess. You have less returns, and you just don't have a huge like IR team who's out there, meeting with LPs every day. So that's kind of table stakes. I think another thing is this idea that these bigger funds have money to deploy, and oftentimes, I see them kind of creeping into early stage cap tables. And I think that can be really tough. It can be tough for us because, this is optionality for them, and they often do not care what the price is. So, sometimes I will get to a round not as the first person, but, they say, well, big $1 billion fund, gave me a 200K kind of scoutish check, and they set the price at 15, for a pre-seed deal with no traction. And I'm like, well, that isn't really the price, right? That's optionality for them because they want to be putting in millions of dollars, tens of millions as these companies progress because they really play at the A's and the B's. So I think that is problematic because it doesn't set up founders for success. It's hard for us because we can't invest in those deals. It doesn't meet our, it doesn't fit our model. So I think that's one of the challenges that I've faced is, just these kind of, mismatch maybe of incentives when it comes to doing deals.
We've seen that too. And the caution that we typically give to founders is that it's an option play for them. So if these mega funds don't do the next round, it becomes a major red flag for every other investor just because people know that mega fund has the ability to do the follow-on. And if they're not, it might be something's wrong with the company.
Yeah, there's definitely some signaling risk with that, and yeah, it's challenging to coach our founders because on the one hand they're so excited, that big Sand Hill Road fund wants to put a check in, and listen, I get it. I was an entrepreneur, if I had some of the best funds who wanted to put a check in, I would feel pretty good about that as well. But I think we need to kind of backtrack and educate our founders as to what some of the flags could be, and ultimately they have to make their own decisions. But I feel like some of them are not even really aware.
One of the things we're seeing in the emerging manager perspective. And this is highlighted actually in our first episode we released with Kathleen Estreich, who's a partner at Pear VC, is that some emerging managers are joining traditional venture firms like Kathleen did. And so we're seeing in 2021, if there was an explosion of emerging managers, I think, and I guess the question is, would you agree that this is probably one of the more challenging moments for emerging managers?
Wait, so are you saying that you think that emerging managers are going to go work at big firms? Are you seeing that?
There's two things. One is that it's very difficult for emerging managers at this specific point in time. And so some of them are looking at what do I do next? And some of them will join traditional firms and some of them will start companies or join companies. And so I guess the question is, would you say that this is one of the more challenging moments through the periods that you've seen for emerging managers? Or is that a bit of an overstatement?
I mean, I was a founder right before the GFC, right? 2007, I started my company. I think there's this misperception that it's ever easy. And maybe there was a moment in 2021 where it was easy for founders and it was easy for managers. Like maybe that was a weird blip in time. I just think this business is hard. I think if you want to, have an easier business, like, get a job at Goldman or, go work at Google, I think like you can be making really good money and like chill and it's a nice environment. I think this is a hard business in many ways on both sides, founder, investor. It's very hard to make money in this business. It's very hard to, do all the things you need to do. So I think it's a little overstated that there's going to be this kind of wipeout moment for emerging managers. Yes, a lot got put in business as solo GPs, as you mentioned, solo capitalists and others. And maybe they'll go on to other things, but maybe they'll come back. So I see it less as this existential moment and more as it's kind of there's a lot of fluidity now between being a founder and being an investor. Whereas, when I started, it was still kind of novel. In 2013, it was still kind of novel to have all these founders or to have a founder becoming an investor. There was more of like a different track. And, historically, even more so, right? You kind of worked your way up and maybe your background was in finance. Like that's totally been upended. And so I think you're going to see people go back and forth. And, honestly, as you know, like one of the things I love about running Everywhere Ventures is it's way more like running my startup than it would be to be, a partner at Bessemer, right? The things that I do in one day, right, is just that breadth is more like being a CEO. And so I kind of love it. So I'm not saying that it's, at all as challenging being a manager as being a founder, because being a founder is way harder. But like the diversity of what I get to do in a day is so exciting. So,
Absolutely.
So I think that you're going to see, more, managers kind of start companies, alternative models. But I think you'll see that ebb and flow as the cash comes in and out. And I think where managers are really hungry and they feel like it's their life's work, like me, like I'll just find a way to raise money. I don't care if I need to go to the ends of the earth. I don't care if I need to take my own money. Like I will figure out how to do the work that I love because I feel like I was put on this earth to do this work.
Fascinating and motivating. One of the things that I feel like I experienced firsthand at Context is we started in 2021, and only now do we have a semblance of what I would say a brand. And I even hate to, and I use that in air quotes. And I feel like now we're starting to see more deals, and it takes time for an emerging manager to stand up. Obviously, if you're an emerging manager and you split from a larger fund, you have that. I'm curious, have you experienced that, and do you feel now that like you all are recognized a fair bit as being great pre-seed investors, active pre-seed investors, you're seeing the deal flow, that quantity and quality of deal flow?
Yeah, I mean, I'd say Scott and I were emerging managers slightly different. We had both, I spent 7.5 years building my brand as an investor at Techstars. And I think that, I kind of solidified a little bit of being, the early stage go-to person, at least in New York. So I do think we had the benefit, not that we have this like, huge brand now, but I think we did have a benefit of having, we'd built big, networks, communities and that. I will tell you, I did have a very kind of, vulnerable moment when I was like leaving Techstars because I'd been there for so long, and there were people in New York would literally refer to me as Jenny from Techstars. I don't even think people knew my last name, right? And so I did have this moment where in 2022 when we decided to go, just full on and I left of like, oh my gosh, am I going to be invited to conferences to speak and things? And, our founder is going to be able to find me and know me. And there definitely was like a moment of real insecurity there. I was pleased to find out that like, people knew me and didn't necessarily just associate me with the previous brand. So but there was definitely a moment of like, oh my gosh. I think, you've got to just like do the work, and it just takes time. And, it's awesome that you guys are, starting to come out of the woodwork a little bit more and people are knowing you, which is great. I think the benefit that we have is like there really aren't that many pure pre-seed funds that are so high volume like us and do so many deals. And everyone says they're pre-seed, but if you look, I always tell founders, look on Crunchbase, like if they're investing in $10 million rounds, like that's really different than what we do. So we're kind of part of a small handful of of people, where we're a little bit of the default. And so it's funny because everyone will say like, wow, isn't it so crowded? I'm like, pre-seed is actually not so crowded. There's really not that many of us. So
Totally agree on the state of pre-seed, how few VCs are actually in that space. One region of the world that I'm very fond of is New York and Manhattan, and obviously Manhattan is not New York. There's Bronx, Queens, and all that. Every time I go to New York, I am blown away by how active and dynamic the startup scene is. I'm curious. You live in New York. How much it's progressed, and how much further do you think it has to progress?
I mean, I started this podcast talking about 2007, and everyone said, "Go West, Jenny," right? So I have been living in New York my whole life, building communities, ecosystems, and companies here, and just to see where it's gone in the last 20 years has been absolutely incredible. But I'll give you some examples and stories because I think that I think that we in New York can build it in a way that's pretty interesting. So in 2013 and 14, I started investing into deep tech companies. I had really no background and experience in it. And everyone again said, if you're going to do deep tech, you need to go to California, you need to go to Boston, but there's nothing in New York. And then you started seeing, these kind of little pockets happening in Brooklyn. The Brooklyn Navy Yard's open, which is this incredible place, the New Lab. You saw companies like MakerBot. And so again, it was those early companies, that mentorship, those founders that then started starting other companies. It was a very exciting time actually to invest in hard tech. I invested as the first investor in a company called Latch, which ended up going public, right? But they were based in DC, and I convinced them to come to New York. So small things like, attracting a few people here can actually put an ecosystem on the map, right? And really kind of contribute to it. And now people would say yeah, it's not super cheap to, live here and have a big office, but yeah, you could build hard tech in New York. There's tons of resources. The government's putting in lots of money. There's good topsoil for that. So I think what's cool about New York is that you can build anything here. The other example is fintech. So in 2015, I started the Techstars FinTech Accelerator here, and it looked like at that time London was going to be kind of the place for fintech, and very quickly, we all changed that. I was a very small part of it, but there was other programs that started. I got the founders of Chainalysis to move from Europe to New York, and that became a huge success story. And now they have 500 employees in New York. And the founders of Alloy to move from the DC region to New York, and then that became our home. And so there are just all these great stories of how we all helped build some of these ecosystems. So I'm really proud of New York. I think you can build anything here. Whereas when I started my company, people were like, I don't know, maybe if you're e-com or an ad tech company, this is a good place, but otherwise not so much. I think we don't believe that anymore.
Through what you just said, I feel like there's two meta takeaways I'm getting from that vignette, but the broader conversation, and that is potentially a lot of pre-seed investors like Everywhere Ventures and yourself, and I think of Hustle Fund and Precursor, are ecosystem and community driven. You all build a community, you all believe in it. And part of that is obviously based off your background as Techstars. You've seen it. You've helped New York City grow as a startup ecosystem. Elizabeth at 500 startups. And then the second one is that your geographic view or your everywhere mindset feels like maybe you've seen the success of New York City. And so you're like, I can actually see that happening in these other different pockets of the world. Do you think that there might be some connection there?
100%. I lived in London also 2010, and that was I was the first, one of the first residents at Google campus, which opened in, an area in the East, whereas it was kind of a desolate area. Now Shoreditch is just this kind of haven of startups, and it was amazing. But when I, was living there, it was the VCs actually lived in Mayfair, which is a very fancy, the equivalent would be Heights or Madison Avenue here, and it's it wasn't very startup-y, right? And then Google Campus and all of that kind of startup. So it was amazing to see that ecosystem just explode around that time. So yes, to your point, I'm a believer that, if you've got the raw ingredients, I don't believe that every ecosystem can become Silicon Valley. But if you have the raw ecosystem, the raw ingredients, which is really, talent, obviously, like, incredible people, ability to sell, right? Like markets. If you've got some access to capital, like if you've got those three things, like you can build a pretty great startup ecosystem.
Fantastic. We're coming to a close, so I want to ask you some rapid fire questions. First is, this is a difficult one, I believe, and that is, what are your favorite travel spots, given you've traveled so far, so many places?
Oh my gosh, it's so hard. Well, I took an incredible trip to Kenya in 2024. It's actually in the book, and it was just mind-blowing. So I would recommend everyone. There's the safari part and the wildlife part, but then there's also just, what's going on in the cities there, the ecosystem that's developing in Nairobi. So very impressed.
Favorite snack or treat?
I'm from New York, pizza.
Nice.
Give me a good slice.
Favorite movie or movies?
I haven't watched a lot of movies recently, but I'm going to give you a good Apple TV or Netflix or whatever rec. So I just watched this series called Bad Sisters, and it's so good because it really challenges your your sense of what's right and wrong. So I won't give it away, but I really enjoyed that recently. So if you're looking for a good pick, you got to get into it. But it takes place in Ireland. It's like really beautiful and kind of dark and surreal. But I really enjoyed it.
Favorite book besides Venture Everywhere?
Well, I can plug my co-founder Scott, who wrote an amazing book called The Fuzzy and the Techie. And essentially, it's really he really saw the future. Talk about someone who saw the future. The book is about essentially how the humanities need STEM and STEM needs humanities. And we're seeing that shift right now. Like, what's happening with engineers and where do we think, STEM is going? What's happening in humanities and how are we all thinking about, the implications, the moral implications of AI? So Scott Hartley, Fuzzy and the Techie.
Amazing. For our listeners, a few things. One is, if you're a founder, pre-seed founder, make sure to talk to Everywhere Ventures. They're a fantastic firm. We've co-invested with them on pre-seed deals. Second, if you're an LP, institutional, or a founder LP, you should be chatting with Everywhere Ventures. And for anyone and everyone, please check out Venture Everywhere. It's a fantastic new book that Jenny's written. Jenny, thank you for being a great co-investor, for joining us on this podcast, and wishing you and Scott tremendous success.
Thanks so much. It was so fun.
Awesome. Thank you.